So let's get started. Good evening, everyone. I'm October Batch. So I want to, what I'm teaching you guys is my trading strategy, which is basically market structure, liquidity, point of interest, then the entry and exit of it. Now, the topic will be split into 4 sections: the market structure for the first topic, then the liquidity, and then one point of interest for the first session. That is for today's session. The second session will take the 2 point of interest I make use of, which is the order block and then the breaker block. Then I will give you guys the 4 rules I follow while picking a point of interest to make it valid. Then the third session, be about types of liquidity and how to take profits using liquidity. Then the fourth class will just summarize everything. So the topic is market structure, market structure, liquidity, and then points of interest. This is the topic: market structure, liquidity, and point of interest. This is my trading strategy. So I will take the market structure first, then liquidity, then point of interest. So what is market structure? I don't know who's drawing this rubbish on the screen, but better stop. So I don't understand. Market structure. Come. So market structure is the behavior, condition, and the current flow of the market. It's basically the current order flow of the market. So market structure is the behavior, condition, and current flow of the market. This is what market structure is: the behavior, the condition, and the current flow of the market. That's the basic order flow of the market. That's what market structure is. The pattern in which market moves from one direction to the other. So if prices will move from, let's say prices are 20 and is moving to 30, the pattern and the condition in which market moves from that point to the next point is what market structure is. Simple as that. Then there are 3 types of market movements. There are 2 types of market movements. There's a trending market, and then there's the ranging market. So there are 2 types of market movements. So market structure is the behavior, the condition, and the current flow of the market. It's basically the current order flow of the market. And there are 2 types of market movements. There's a trending market and then there's a ranging market. The ranging market, there are 2 types, which is the uptrend and then the downtrend. So So types of trending markets, there's the uptrend and then the downtrend. So what I mean by an uptrend is when market is making a series of higher highs and higher lows. That's what it means for market to be on an uptrend. So Market is making a series of higher highs and higher lows. For this scenario is market making a series of higher highs and then higher lows, higher highs and then higher lows, higher highs and then higher lows. This is what it means for market to be on an uptrend. Meanwhile, a downtrend is market making a series of lower highs and then lower lows, lower highs, lower lows, lower highs and then lower lows. This is what it means for market to be on a downtrend. So this is an uptrend right here, and this is a downtrend. So for uptrend is when market is making a series of higher highs and then higher lows. For downtrend is when market is making a series of lower highs and then lower lows. Then we have the ranging market, which isn't really trending anywhere. It's just moving from one particular point to another. If you move from point A to point B, you move back from point B to point A, move from point A back to point B. So it's ranging. A range means like being stagnant. There's really no much, just being in the same fixed position from here to here, and from here back to here, from here back to here to here, from here back to here. This way means for market to be on a range. It's more of a consolidation. So ranging market. So so the market structure is the current flow of the market, the behavior and the condition of the market. There are two types of market movements. We have the trending market and we have the ranging market. In the trending market, that's when we now have the uptrend and then your downtrend. And then we now have the ranging market. So this is just introduction to market structure. Now, what I actually look out for in trading market structure part of this strategy, there are two things I look out for. I look out for market structure shifts. Number one, I look out for break of structure. Number two. Now, what is a market structure shift? Now, market structure shifts, the two things I look out for while picking the structure part of the strategy is market structure shifts and then break of structure. So market structure shift, this is an indication that a current trend is about to end and the new one is about to begin in the opposite direction. So it's an indication the current trend calling my mobile. So a market structure shift is an indication that the current trend is about to end and a new one is about to begin in the opposite direction. So that is what market structure shift is. So type it out. That is what market structure shift is. It means it's an indication that a current trend is about to end and a new one is about to begin in the opposite direction. Now, what do I mean by this? This works, market structure shift works majorly for trending markets. So let me give you an indication of a market structure shift. So let's say, for example, that price was on an uptrend, previously on an uptrend. That's you seen market making a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs. The market does something like this. Instead of making another higher low to continue the uptrend, market does something like this. Now, if you're not paying attention, the market structure has shifted. That's why it's called market structure shift. The previous trend that market was on before could not be maintained. Now it's an indication now that this is no longer an uptrend, but we're now looking for, well, market is now turning into a downtrend. So if you are taking buys previously and you witness a market structure shift, what you should be looking out for is now sells. So this shift right here is an indication that the current uptrend is about to end and the new trend, which is downtrend, is about to begin. So that's why I said it's an indication that the current trend is about to change and the new one is about to begin in the opposite direction. Could you see my screen? Can you guys see my screen? Can you guys see my screen? Okay, no problem. So let me go. That's what I'm saying. So the market structure shift basically is an indication that the current trend is about to end and the new one is about to begin in the opposite direction. So previously, market was on an uptrend. You can see the characteristics of an uptrend is higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this is the higher high, then this is the higher low. This is the higher high, this is the higher low. This is the higher high, this is the higher low. This is the higher high. Then what the market do? It broke down this low, meaning that this is no longer an uptrend. It has already changed structure to the downside. So you mark this place out as your market structure shift. That is what this is. So mark it out with MSS. That is what market structure shift stands for. MSS. So let me give a proper indication using the charts. Paying attention to this trade right here. You can see market making a series of higher highs and higher lows. Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows. Higher highs. Then market did what? Made a lower low right here. So pay attention. Previously, I will be taking buys from this trade. Higher highs, higher lows, higher highs. So we're taking buy continuations. But what did the market do? This was the last low in the market. But this particular move that happened here now turned market. Can you guys see my screen? Can you guys see my screen? I don't know what's wrong with network. But hope you guys can see my screen and hear me. Know what's wrong with network. Okay. So higher highs, higher lows, 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 higher highs. The market now broke down the last low and made a lower low. This here is an indication that market is now turning bearish. Market structure shift happened right here, but this was the last low, and the market took out that last low, now changing the trend of this market from an uptrend downtrend. So this is where the market structure shifts is same as what I am marked out here. Market on an uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then broke the last low and the lower. This has already turned market from a previous uptrend to a downtrend. That is market structure shift. Same as the market being on a downtrend and turning bullish. So sorry. So this let's assume this was an, yeah. So this lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Then some market does something like this: lower highs, lower lows. Then does something like this: higher high. This was a previous downtrend because the characteristics of a downtrend is lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower highs and low. Then market was supposed to make another lower high here to continue the downtrend. but instead it made a higher high, meaning that this market is no longer on a downtrend. It's now changing direction to the upside because there was a market structure shift. So this was where the market structure shift for this particular trade is. So I will indicate that with MSS. Now, for people that ask about time frames, there is no particular time frame for any strategy. Structure is structure. Market structure is market structure. The other thing is that it's good to trade with the confluence of the higher time frame. If you are looking for buys, at least your higher time frame should be in a zone where buys should happen. But structure is structure. Structure on 45 minutes is the same structure on 30 minutes. This go, for example, there was a market structure shift on 30 minutes. If I go to 45 minutes, it's still a market structure shift. If I go to 5 minutes, it's still a market structure shift. Structure. Structure is structure. Just that, see, still an uptrend that can bearish. 10 minutes, the same thing. 15 minutes, the same thing. You just have to identify structure. Structure is structure, regardless of time frames. You understand? So that was market structure shift for the upside, and then for a bullish market that turned bearish, and also for a bearish market that turned bullish. So a market structure shift is that is one thing I look out for the market structure part of the strategy. The second thing I look out for is a break of structure. Now, what do I mean by a break of structure? A break of structure is when market breaks a significant zone in price while still remaining in the same direction it was at before. While still remaining on the same direction it was on before. So in market structure shifts, it will change trend to the opposite direction. But in break of structure, it will break a significant zone in the market, be it a high, be it a support zone, be it a resistance zone. It will break a particular zone in the market, but it's still going to remain in the same trend that it was on before. So let me write it down. Who's the person drawing that thing on the screen? So break of structure is when market breaks a key level in price while still being on its current trend. Now, this key level can either be a support zone or a resistance zone. That is what key level is. So let me give you a clearer example of what a break of structure is. Let's say this let me say this is a resistance level in market. This is a resistance zone market. This this is a resistance zone. So I'll mark that with resistance. So, and then price happened to be on an uptrend, which is market making a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Then something like this will happen. What is wrong with my internet? Something like this will happen. So I'm sorry, people keep interrupting me in the group. I don't know what's wrong with some people. If you know someone is teaching, instead of you to wait for the person to finish teaching, will I be teaching and be checking test messages? They will keep sending tests, and some people are even calling me on my direct mobile, interrupting my network when I'm teaching. So for market structure shifts, there's indication that price is about to change direction to the opposite side. But in break of structure, a key level is broken in the market. And market is still going to remain in the same trend it was on before. So for this particular trade, it was on an uptrend, and you can see higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. The market now made a higher high, but the higher high that it made broke this resistance level. This is what a break of structure is. If it was to be a market structure shift, market would not break to the upside. It will simply just break down, changing direction to the downside. But in break of structure, it will still break towards the direction that market was trending at before. That is the difference between market structure shift and then break of structure. In market structure shift, it changes direction to the opposite side. In break of structure, it still maintains its current direction, but it breaks a key level in the market. So this is the break of structure for an upside, and then this one should be a break of structure for the downside. So so this is the break of structure for market being on an uptrend. Then this should be the one for market being on a downtrend. So let's assume that this is a support zone. This is a support zone, and market was on a downtrend. That is lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower highs, and the market does something like this, breaking the support zone. Market was previously on a downtrend, and then the zone that it broke was still on a downtrend. So it's still continuing the current trend it was on before. If this was to be a market structure shift, so market should actually break structure and then change direction to the upside. That is the difference between a break of structure and the market structure shift. Pay attention. This is a market structure shift. Previously on an uptrend, change direction to the downside. Previously on a downtrend, change direction to the upside. But for break of structure, previously on an uptrend, still broke structure on the upside. Previously on a downtrend, still broke structure to the downside. That is the difference between break of structure and then market structure shift. These are the two things I pay attention to when I look out for my structure part of my strategy. Once I open my charts and I see, I know I trade market structure, liquidity, and point of interest, and I open up my market structure part of my strategy, what is the first things I look out for? I look out for the current trend, and I look out for my break of structure or my market structure shift. Those are the only two things I look out for. So I gave a graphical example of the market structure shift here. Let me also find an example of a market structure shift. Sorry, of a break of structure. I gave an example for a market structure shift. Let me also find an example of a break of structure. So this trade, this is a resistance level in the market. And clearly see this was a resistance level in the market, right? And then market was making higher highs and then higher lows, which you can clearly see from this. You see higher highs, higher lows. Here, okay, no, let me just use this higher highs and higher lows, higher highs and higher lows, higher highs, higher lows. Then what did it do? It broke past this key level being a resistance zone, but it still broke past it while we're still maintaining the uptrend that it was on before. So this is the difference between a break of structure and the market structure shift. If it was to be a market structure shift, this was what will happen. Market will change direction to the downside. But since it was a break of structure, the market changed direction to the upside. So it was maintaining its current trend while still breaking a key level in the market. That is the difference between a market structure shift and the break of structure. So that is the structure part of the strategy. Now it's time to move on to the liquidity part of the strategy. So this is the structure part of the strategy. It's time to move on to the liquidity part of the strategy. So liquidity. So what I use as my liquidity for taking my entries is inducement. That's what I use as my liquidity. Now what's induce? What is an inducement? An inducement is the first valid pullback that market makes after a break of structure or a market structure shift. Liquidity is the first valid pullback that market makes after a break of structure or a market structure shift. So now when you open up your charts and you've gotten your market structure shift or your break of structure, the next thing you should look out for is your liquidity, because that's why the strategy is lined up like that. Market structure, liquidity, point of interest. It means once you open up your chart, first thing you should look out for is the market structure part. Once you've gotten either your break of structure or your market structure shift, next thing you should look out for is liquidity. It's piece by piece. So once you've gotten your market structure, you go for liquidity. Now, what is my liquidity? It is my inducement. And inducement is the first valid pullback that price makes after a break of structure or a market structure shift. So after you've gotten a break of structure or a market structure shift, the first valid pullback that market makes. So liquidity slash inducement. So as my liquidity is my inducement. So inducement is the first. That is what my inducement is. The first valid pullback market makes. Sorry, market makes. Inducement is the first valid pullback market makes after a break of structure or a market structure shift. So let me give you a visual example. So let me use the market structure shift on first. So for the uptrend, this is an uptrend, and the market made a market structure shift. So before you can take any inducement, before you can confirm your inducement, you have to first see either a break of structure or a market structure shift. Pay attention. So this was a market structure shift right here. After that, markets should make some kind of pullback close to the zone that market broke up on. So let's say this is your pullback. The market will continue going in that direction that it broke structure to. So market broke structure to the downside. After breaking structure to the downside, it will make a pullback. This pullback that market makes close to the zone it broke structure from is your inducement. That is what my liquidity is. So this is the inducement for this case. This is the inducement for this case. Same as for this, if market actually breaks structure to the upside, after breaking structure, it will make a pullback, that's this, then before eventually going back up. So this pullback is what your inducement is. Now know something, your inducement is a trap. It is not your entry. Inducement is a trap in the market. Eventually, it's inducing early traders to think that market is about to change direction. But meanwhile, market will still come out and take out that inducement. That inducement has to be taken out. That is what it means for market to move. Liquidity has to be taken out from one point. And if liquidity is taken out from this point, it's targeting the liquidity on the other point of the market. That is what fuels the market liquidity. So this is the inducement, the first pullback that market makes after a market structure shifts or a break of structure. So this is the market structure shift for this side, and this is inducement here. And this is the inducement right here. So it said the inducement is the first valid pullback that market makes after a break of structure or a market structure shift. So this is the market structure shift part. This was when market broke structure to the downside. This is the first pullback it makes before continuing that move. Same as this, market broke structure to the upside or changed structure to the upside. After it changed structure to the upside, he made the pullback before continuing that move. The pullbacks he makes is the inducement. So let me show a live chart. So this was the previous move in the market. Pay attention to the previous move. So as market was on an uptrend, you see market being on an uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then this was when market shifted structure to the downside, right here. This after market shifted to the downside, there was this pullback that market made close to entry. That's this pullback. This particular pullback is what my inducement is. You could use this, but the first pullback that market makes before pushing market down that zone that it broke structure two or shifted structure two. For example, so market shifted structure to the downside here. So where the market structure shift is. After that, market pulled back up to this level. So this was the market structure shift. This was the pullback that market did before continuing the new structure shift that market did. So after market shifted straight to the downside, it put back up here before continuing the move. Understand? So this pullback is your inducement. That is your liquidity. Pay attention to when market comes there. Markets will come here, bounce back down, come here, bounce back. So most people will be selling from this zone, thinking that this is where market is supposed to be reversing. It may work for you once or one time, two times, but the overall TP for market to take out the liquidity is not going to happen until that first liquidity on this side has been taken out. So this is where the inducement is for this particular trade, because that is the first valid pullback that market made after this market structure shift. So it's just like this. Market was on an uptrend, shifted straight to the downside, made this pullback. That pullback is your inducement, same as this. This pullback is your inducement. So same as market being a breaking structure. If there was a structure shift in the market, for example, this was a break of structure. After that, market will make a pullback. After making the pullback, it will now push up again to that direction. That pullback it makes is your inducement. So inducement. This is your inducement here. Pullback. Same as market breaks the support zone down here. So market will make a pullback. This pullback for continuing this move. This pullback that market makes for continuing that move is what your inducement is. Now, the pullback can be multiple candles and it can also be one candle. Everything depends on the time frame because 10 5 minutes candles, let's say there are 5 minutes candles and it's 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. On 1 hour time frame, it can just be a single candle. On 10 minutes, on the 5 minutes time frame, it can be 10 candles. On 1 hour time frame, it can be a single candle on 10. So the how many candles it is does not really matter. On this gold, there are multiple candles. You can see one here. But if you change time frames, usually one candle. So it does not matter whether it's a one candle pullback or multiple candle pullbacks, as long as it's a valid pullback. And what I mean by a valid pullback is this. This is what I mean by a valid pullback. Well, if market breaks structure to the downside or to the upside, let's say this was resistance zone, and then market does something like this and breaks past it. Market breaks past it like this. After breaking past it, it makes this pullback. What I mean by it being valid is that's to push market up close to at least 50% of where this last move stopped. From here to here, at least 50% of the last move, where it will come back down to clear that inducement and trigger the main point of interest. It can as well be this breaking out or shifting structure, pulling back. This is your first pullback. Can at least pull market to the same equal high, then come out and take out the inducement before going up. It can also be market breaking out, making the first pullback. The next move will push it higher before it eventually come down, clear that inducement, trigger the main point of interest, and start moving up. This is what a valid pullback is. A valid pullback has to at least push market close to 50% of the last move that happened. If this is your resistance level and market breaks out here and then makes this as a pullback and then pushes market up a bit and then starts coming to trigger the point of interest, this is not a valid pullback. This can just turn market bearish. Stand. This can just be a liquidity sweep. The first pullback should at least push market up close to like 50% of the last move that happened before coming to trigger the main point of interest to hold the breakout or the market shift. That's what I mean by a valid pullback. So this is the one for gold market structure shift. This is the first pullback right here. And then I will show for GBP JPY chart that I was on for a pullback in break of structure. So market was previously on an so this was a resistance zone in the market right here, and the market was making higher highs, higher lows. higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs, and broke this resistance level while still maintaining that same current trend it was on before. So I'm not going to be looking for sales on this trade. What I'm looking out for is buy because it broke a key level in the market and at the same time it maintained its current trend. So in break of structure, I'm still going to be looking for buys on this trade. So as market have already broken structure to the upside, I've identified my break of structure on this trade. Next, now I'll be looking out for my first valid bag, which is my inducement, which is right here. This is your inducement. Like I said, it can be a single candle, multiple candles. But pay attention, you can see this candle right here, this candle. And after this candle, this pullback happened. It still pushed markets up more than the last move. So this is a valid pullback. So I've gotten my break of structure. Yeah? I've gotten my inducement right here. Same thing as this gold. I've gotten my gold. I've gotten my so for gold, I've gotten my market structure sheet right here. I've gotten my inducement right here. So like I said, the inducement is the first valid pullback that market makes after a shift in market structure or a break of structure. That is what your inducement is. That is what I use as my liquidity. Do you understand? So first of all, if you open your charts, first thing you should look out for is the market structure part of my strategy. Am I seeing a break of structure or am I seeing a market structure shift? After you've gotten your market structure shift, just like I did here, or your break of structure, just like I did in GG, next thing you should do is now look out for the very first valid pullback that market makes, which is your inducement. After you've gotten that your inducement, you now know that the only thing remaining in that particular trade is for you to get your point of interest. Now, I make use of 2 points of interest. I make use of my other blocks and I make use of my breaker block. I'm just going to take the other block in this session. The next session, that's when I will now introduce the breaker block. And knowing when to use your breaker block or knowing when to use an order block, that is what I'm going to introduce in this class. There are 4 rules in picking a point of interest. There are 4. Those 4 rules will now tell you when to make use of a breaker block and when to make use of an order block. But for this particular class, I'm going to teach just order block for the first session. So if you open up your charts and you see your market structure shift or you see your break of structure, next thing you should look out for is your inducement, which is your liquidity. After you've gotten your inducement and your liquidity, you've already fulfilled 2 parts of the strategy, which is market structure, then liquidity. What's the third one? Your point of interest. Now, like I said, I make use of my order blocks and then my breaker blocks. For this class, I'm taking just the order block. So now that you've gotten your market structure sheet in this particular trade, you've gotten your inducement in this particular trade, next thing to look out for is your point of interest. So order block. Now, an order block is a zone in the market where there are a lot of institutional orders. Now, do you understand that you that trade or us that trade with $1,000, $100, 10,000, $100,000, we don't really move the market, nothing. We're not the market makers. There are institutional traders that trade with over billions of dollars. Those are the people that actually moves the market. That is where those places that they place their orders. That is what an order block is called. So there are literally 2 types of order blocks. There's the bullish order block, and then there's the bearish order block. Now, for your bullish order block is when you're looking for buys, and then your bearish order block is for when you're looking for sells. So, for point of interest, so order blocks. There's the bullish order block and then there's the bearish order block. How do you identify a bullish order block? A bullish order block, you will see a bearish candle and then you will see a bullish candle engulf it. So something like this. This is what a bullish order block looks like when you're looking for buys. So this is what a bullish order block looks like. You see a bearish candle, you see a bullish one engulf it. So let me make it look this thing more like the ones you would see on your chart. So this is the bullish order block. If your chart is red and blue, you see. So you see if your chart is red and green, you see something like this. So it doesn't really matter. So this is a bullish order block. And then a bearish order block is you will see a bullish candle, then you will see a bearish one engulf it. So this is the bullish candle, for example. And then you see another candle bearish engulf it. So that is what a bearish order block looks like. So this is what a bearish order block looks like. A bearish one. So a bullish order block, a bearish order block. So this would look something like this. So this is a bullish order block right here. And this is a bearish order block right here. So use this bullish order block when you're looking for buys. You use this bearish order block for when you're looking for sales. Now, I know people also ask, how do you pick other blocks? Pick other blocks by picking the demarcation, the difference in the two, the demarcation. So this was the bearish move. This was the bullish move that engulfed it. So you pick your entry from here. Same as this was the bullish move and this was the bearish move that engulfed it. You pick the difference from here. Now, most people also ask, because I already know what's in your mind, what if there are wicks in the other block? How do you pick another block if there are wicks in the other block? So, for example, let's say this was a bearish order block, and then this is the wick, and then this is how the candle is. This is a wick. This is the candle, and this is the wick. Now, the rule in picking wicks in other blocks is if the wick of the other block is bigger and longer, sorry, and is longer than the body of the other block, you pick your entry from the body. You understand? So if the wick of the other block is longer than the body, you pick your entry from the body. Or in a situation where the wick is smaller than the body, for example, this is the body, and then this is the wick. So this is the body of the other block. So it's bigger than the wick of the other block. If you're picking your entry, pick your entry from the wick of the other block. Do you understand? Because in this case, the body of the other block is bigger than the wick of the other block. Pick your entry from the body from the wick of the other block. But in a situation where the body is smaller and the wick is longer, pick your entry from the body. Do you understand? So in this situation, if the wick is longer and the body is smaller, pick your entry from the body. Or if the wick is smaller and the body is bigger, pick your entry from the wick. That's just it. So this is a bullish order block, and then this is a bearish order block. So for this trade, for this scenario, for this one I'm using as this scenario now, we have gotten our market structure shift right here, gotten our first valid pullback, that is the inducement right here. The next thing to look out for, now pay attention, I said my inducement is my liquidity. So I've gotten my market structure part of my strategy. I've gotten the inducement part of the strategy. It's time to now look out for the breaker block part of the strategy. Do you understand? So I've gotten my market structure, which is my market structure shift. I've gotten my liquidity, which is my inducement. Since I'm looking out for sales, what I'm going to now be looking out for is my point of interest. That is my order block. And in this case, since I'm looking for sales, it means I'll be looking out for bearish order block. So how does a bearish order block look like? You see a bullish candle, and then you see a bearish candle engulf it. In this case, this is what bearish order block looks like. You see a bullish candle, then you see a bearish candle engulf it. So I marked my order block from this. And what the market do? The market eventually tapped into this order block, continue selling. So let me see if I can find before. That's when I made this analysis. See if I can find it. So this was the trade. Can you see? I saw my market structure shift. I saw my inducement, and I marked on my order block. This was before NFP. So even people that gamble news, you don't have to. This trade was during NFP. A trade guard before NFP. Technical analysis can actually tell you the direction of the news. If you're correct with your technicals, trust me, news mostly confluences technical analysis, except few cases it does not. So I had this analysis before NFP. So this market triggered during NFP. Pay attention, during NFP. That was when I took this trade. But this move happened during NFP. This is it 130. You can see. Okay. Yeah, doing NFP, but the whole candle happened to doing NFP news. So this is it for the market structure shifts. Let me also look for the breaks for the bullish scenario. So let me also look for the bullish scenario. In this case, I identified my break of structure. I identified my first pullback, which is in this month right here. And then, because this was when market broke structure to the upside. After that, the first valid pullback the market made was this. After market made this first valid pullback, market now started coming back to trigger my entry. Now, I used my breaker block, but in this case, let me just use other block because it's only the other block that I've taught you guys. So this was the other block right here. So I will wait for price to now come in and trigger that other block. And after market trigger that other block, it's continue buying. This was also during NFP news. So as long as you are right to technical analysis, fundamentals actually confluences your technical analysis. If you are right, if you're correct. So this was the move. So market structure, liquidity, and then point of interest. Market structure, liquidity, point of interest. The market structure part, you look out for your market structure shifts or your break of structure. In the liquidity part, you look out for the inducement, which is the first pullback that market makes after a break of structure or a market structure shift. And then for your point of interest, if you're using other blocks, there's the bullish other block and then there's the bearish other block. Depending on what you're looking for, it can now tell you which one to use to take your trade. The strategy has a very high risk to reward ratio. For this particular trade, you're risking $100, you would have made $1,100 on this trade. Minimal stop loss and still high risk to reward ratio because once liquidity is taken out, it's targeting the other side of the liquidity. And this time around, you know precise entries, you know what place in the market is supposed to reverse, so you don't really take much drawdown. Gold part of this gold trade, if you are risking this gold trade, if you are risking in this gold trade, for example, if you're risking $100, you would have made around $2,700. No, sorry, mistake. If you're risking $100, you would have made around $800. If you're risking $200, you would have made around $1,600. High risk to reward ratio, precise entries. That is the beautiful thing about this particular strategy. So that is what I'm thinking for this. Next section will now be about breaker block and other blocks. And then differences, knowing when to use a breaker block and knowing when to use the other block. And then the rules in following to pick a proper point of interest. That is what I will take in the next class. So if you have any questions, you can now ask. I don't know people that I don't know why some people really do not know when to use their sense, but how can someone be teaching and you're asking questions while someone is teaching? So it's not after teaching you can now ask questions. Like why how can you interrupt other people's classes and be asking questions if I focus and answer one person's question, it's going to take everybody's time and then I'm still not going to finish what I'm teaching. You have to get your questions collectively and write it down. Once I'm done teaching, you can now ask your questions. I don't know why this is basic knowledge that everybody should have. If I'm teaching, you have your questions written down. Once the class is done, you now ask questions. If you keep interrupting me, how am I going to finish what I'm teaching? I don't know why people do this, Sha. I don't know why. So please, if you have your question, just get and then I'm going to unmute you so you can ask your question. The videos will be sent to the group. The videos will be sent to the group. Everything I taught here, the videos will be sent to the group. So what are people raising their hands? Hands will be seen. Kadia. So how come I can't see the people that are raising their hands? I want to see them so I can take their question. Or you can just type your question. Sha. Let me just type your question and I'll answer, please. Relating to what I've taught, please. How do you know a valid pullback after inducement? Okay, like I said, a valid pullback needs to push market close to at least 50% or above of the last move, let's say this is a resistance level, the market, right? And the market was making higher highs and higher lows. Let's say, for example, higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. The market does something like this, higher, breaking this zone. So there was a break of structure. After the break of structure, market does something like this. So this is what you'll be looking at as a pullback. But for it to be a valid pullback, you need to at least push this trade up close to this zone that market stopped after the break of structure before now coming to trigger your point of interest. Or you can still break markets above that zone before coming to trigger the point of interest. Provided it gets market to at least close 50% of the last move, it's a valid pullback. But if market just does this break of structure, this is the pullback, and it pushes market close here and then just comes down. This is not a valid pullback, actually. This means that market is going to likely reverse the downside. So a valid pullback has to push market at least close to 50% or more of the last move that happened. Like after the break of structure, the market structure shifts. That is how you identify a valid pullback. The classes are recorded and they will be sent to the class. So the more you watch, the more you practice, and the more you can ask questions in my view. Like I said, pullback does not matter time frames. Your I know I said this. Your pullback on 5 minutes can be multiple candles. You can just select one candle as long as a move happens. Or your full pullback on 5 minutes can be multiple candles. On 1 hour, it can be one candle. On 10 minutes can be 10 candles. On 5 minutes can be 20 candles. On 2 hours, it can be one single candle. As long as the pullback happens, just pick a candle. Pay attention to this my gold setup. There are multiple pullbacks here. There's a pullback here. There's a pullback here. Even if I select this, as long as that zone is broken, it's a pullback. Even if I selected this one, market will still sweep liquidity. Even if I selected this one, market will still sweep. Even if I selected this one, market will still sweep. But I'm paying attention to the first one that causes, like market did after the shift in market structure that pushes markets back to that direction. It broke structure too. So this was the shift in market structure. After that, market made this pullback here that now took market down to the zone it broke structure too. That is why I marked this one as my inducement. You can as well still mark this one, it won't matter. But I picked the first one. I always pick the first one. The person asking me when marking an order block, do we involve the week? I literally thought this here, like right here. I said it in this class, except you are not listening. Just to watch the videos. I said if you're picking your other blocks and the body is smaller than the week, you mark from the body. If the body is bigger than the week and longer than the week, you mark from the week. I said this here, except you are not listening. You can't have two pullbacks after market structure shift. Like I said the first one. Please, just pay attention to what I say before you ask questions. Pay attention to the keyword. I said the first valid pullback. Even if you check what I wrote down here, I said inducement is the first valid pullback. So when I say first, it means the first one. If I say first valid pullback, it means the first pullback. There is just to watch some videos. Look at all these definitions. I said inducement is the first valid pullback. So provided the first one, that is what you mark, the first pullback. If there are two, where is the first one? That is what you're marking as your inducement. A valid key level, there's no such thing as a valid key level is just a resistance zone and a support zone. Like I've said, I don't think I'll teach this in the other class. I would know how to place a cell. I'll still go into I'll still go into details when I start talking about breaker blocks and how to pick a valid point of interest. For now, I'm just introducing you guys to the topic, market structure, inducement, and point of interest. So next class is where I'll go deeper in this. What's top down analysis? This is not what I'm teaching in this class. I'm teaching market structure, inducement, and point of interest. I'm teaching my trading strategy. If you have your top-down analysis, do your top-down analysis. I don't know if you want to do that, do that. I don't think I mentioned anything regarding top-down analysis in this strategy. If I did, and you ask me questions relating to it, I'll answer. But I told you I'm teaching my trading strategy, and you should ask me questions relating to what I'm teaching. There were two pullbacks on the gold, but the price took the first one. Yet you called the new pullback about this one. How? Which two pullback on gold? Which pullback? This is the valid pullback that actually pushed market down. It was this pullback. This is my inducement. I don't really understand some questions you guys are asking me. How do you know the value support and resistance zones? Am I to teach support and resistance here? See, most people that ask questions, I don't really understand. If you understand what advanced class means, how can you be asking me how you know a valid support zone and a valid resistance zone? Do you know it candlestick Bible? You don't understand support and resistance levels. What cons- it's like I will stop this class because I don't understand most questions people are asking me. Like I said in this class, I said in the next class I will teach when to use a valid, what makes a point of interest valid, and how to differentiate between using other blocks and breaker blocks. I know that I said this in the class. I said if you're not paying attention, go back and rewatch all the videos. I said in this first class I'm introducing an other block, and then in the next class I'm differentiating between a breaker block and an other block, knowing when to pick point of interest. Like you guys don't know what a beginner class is and what an advanced class is, because I don't understand why someone is asking me what a valid distance level is and a valid support level is in, like, this is a beginner class. I don't understand. Like, this is a beginner class. Someone is supposed to be asking questions regarding inducement, market structure, and this thing. This is not a class for beginners. Please, any other person that has a question regarding to what I thought, just tell me, please. Just know that your inducement is your first pullback after market structure shift. Mark anyone as long as the inducement does not touch your point of interest. That is it. My last trade, this gold was a market structure shift. And then so this was where structure was shifted. This is the pullback. Then this is my other block stand. So it's just as simple as that. This last trade, market shifted structure to the downside, made a pullback. That's my inducement. Then I marked out my other block. It's as simple as that. I think, let me look for another scenario. In this case, here for buys. So this was an previous downtrend. So you can see lower highs and lower lows, lower highs and lower lows. Market made the market structure shift to the upside. So this was where your MSS is, your market structure shift. After that, you will see market make a valid back, which is here. So after that, market continued the new uptrend. So I've marked out my market structure sheet. I've marked out my inducement, which is my liquidity. So what I was now waiting for was for market to come out and take out that inducement. So my point of interest, this is a bullish order block. It was a bullish order block. I said you will see a bearish candle, you will see a bullish one engulf it. So that was why I marked my entry. Price came in, triggered my order block, and then continued buying. So once you've identified your market structure, either a market structure shift or a breakup structure, identify your first valid pullback to your inducement, mark it out. I could have marked out this candle as my inducement. I could have marked out this one. Or what was the last one that pushed market to that direction, like that it broke out into? Like the last candle that pushed market to the new direction that it broke out into. That is the one I'm marking out just to make the chart look cleaner. But I believe everybody will have an idea of what an inducement is. Most people just like asking questions to complicate things. Because I don't understand how I've mentioned that the inducement is a pullback that pushes market back towards that direction that it broke out into. And you're asking me when there are two candles, when clearly you know that it's just the pullback. You can mark any candle you want, as long as most times don't even mark out any pullback. You just know that there is a pullback there. Well, as long as it did not touch your point of interest, that is, and you know that market will still take it out. So even if there's an inducement here, as long as price take out the inducement to trigger your point of interest, that is it. I don't understand most questions that people are in advanced level are asking me where to place their SL, and have you not been trading before? And I still remember saying things about how to pick an order block, picking when there's a long week and there's a short week. I said it in this class. Most people will not listen, and then they will still come out and ask me questions regarding what I've already said in the class. The classes are recorded. What's the recordings? If you don't understand anything, ask me questions regarding to what I taught. I saw someone asking me about top-down analysis, asking me something that does not relate to what I'm teaching. How does that work? When is in the break of structure, market structure, must the break of structure must the break of structure must it be a high displacement to either the upside? What? What? What do you mean by that? I don't like. Must it be a high displacement? How? Please pay attention again. Let me just get this straight. Just ask me questions related to what I'm teaching you, please. I teach advanced SMC, and what I'm teaching you, I've simplified the whole strategy too. There's going to be a market structure. Once that structure gets broken, and then it has a valid pullback, that is all you need. I don't understand people coming out with their own questions regarding to what I've not taught here. I don't understand why you're asking me questions regarding to what I'm not teaching. So let's say this is a downtrend. Market is on a downtrend. That is lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. The market did something like this, breaking the last high. This is no longer a downtrend, but now an uptrend because there was a shift in market structure. So this is now an uptrend. After that, you make a pullback, then continue that trend the market now broke structure into, that market shifted structure into. So this is your market structure shifts, yeah, and then this is your inducement here. After that, you now look for your point of interest. It's as simple as I don't know why people like complicating things. You are bringing questions that are not relating to what I'm teaching you and asking in my class. How does that make sense? Some people just like problems. Some people just like problems. Please, Sha, don't really have anything else. If you ask questions not relating to what I just taught, I would know it. Because I don't understand why I'll be teaching market structure, shift and break of structure. And someone is asking me questions not regarding to what I'm teaching. Please, if you have any other, just watch the recordings of the class I will send. And ask questions regarding to what I've taught. What are you going to use and find 50% of the pullback? I think there's measurements here in trading view. If this is a line, a candle line, and this was where the break of structure happened, and then this was a pullback, the market makes a pullback here and does this. If you use your measuring tool here to mark from this zone to here and know it's 16, and mark from this pullback, would you not can you not just know? I don't understand how people question people are asking like, wait, if this was a break of structure and market does something like this, sorry, as a pullback and then pushes markets up a bit, can you not tell if this made it up to at least 50% more? I said at least, not that it has to be 50%. We have to at least push price close to the last zone that the last move happened. I think well, yes, I'm picking class out to differentiate between ask people questions if they're actually beginners because I clearly made this class advanced level, but I don't understand most questions that people are asking me. Can you not differentiate if this move, this this was a break of structure, this is a break of structure, a market does something like this and then does something like this. Does this look does it look like a 50% move to you? No. But if this was the last move, at least you know that this was up to at least 50% of the move. Your eyes, seriously, these people are stressing me with questions I don't really understand. Like something that your eye can see, something your eyes can see. You're asking me questions about it. Can you not? Your eyes not see something. I don't understand. I don't really understand most questions that people asking me. Like, I'm not answering these questions. Seriously, people, I don't really understand this thing. Most questions that people are asking me, and like, I don't get. How can you ask me? How do I know what a 50% move is? Can your eyes not tell you that this move up to at least 50% close to the last move? If you see something moving at least 50, is 50% not half? Can you not measure what half is? How many candles do you take to validate a structure? You know, please, I will drop the recording of this class, uh, watch the videos, and then come back test, and then ask me questions regarding what I've taught. Some of the questions people they ask me, things is even starting to piss me off because I don't understand most questions. Someone has asked me about top-down analysis. Someone has asked me about displacement. Someone has asking me about how to identify 50% move when clearly you can spot it. I don't know when I've mentioned displacement in this class, this entire class that I taught. I've not mentioned anything displacement. So why is someone asking me questions regarding to what I'm not teaching? You the one to now tell me what to include in the strategy that I'm trading. I'll end the class here and I will send the recording of the class, please. So just watch and then ask me questions. Local structure. Local structure is just price taking out previous high or low. Yes, simple. Local structure is market taking out a key level in the market. Support and resistance. Support is a low. Resistance is a high. If market breaks your resistance level, that is a break of structure. If market breaks your support level, that is still a break of structure. But in shift of market structure is market breaking, like changing direction to the opposite side. That's just it. G. Yeah, I've sent you listen to unmute yourself. So you have a question regarding the class. Also unmute yourself, please. Jay, I will mute you, please. So what you want? Jay, I will mute you, please. Say what you want to say. Please, I'm ending the class, please. I'll send the recording to the class, please. This session. The next class, I think I will say I have to take this particular session again, because this whole questions just messed up the whole recording. Even if I send the recordings, the people that will watch it, once they get to this particular part, they will just end this thing because there are no valid questions that people are asking me here. I'm expecting people to ask me questions regarding to what I've taught. What makes a valid pullback? I answered that. And I see someone asking me when to pick a valid point order block. When in the class I was saying the next class will be about when you want to pick between a breaker block and an order block. Most people choose not to listen and still I don't know. That's why I was in a class. Someone was calling me on normal call. Someone that signed this class so was calling me on normal call, disrupting my network that I'm using to teach. So they expect me to stop the class and pick up their phone call. I don't know where some people come from, Chan. Or that's next class. Once you do something, I will just exit the person from the class because I don't really understand some people. So let me just finish the recording.